All right, let's get some insights on the news that's shaping the markets. For that, I want to welcome in Paul Schatz, president of Heritage Capital. Paul, thank you so much for joining us this Friday. Happy Friday to you. Why don't we start out? Yes, exactly. We made it. Let's start out with your takeaways on where we are with trade policy. We had the framework of a deal from President Trump with the UK yesterday, and with the Prime Minister on the phone as well, right? So essentially that's a blueprint from there. But we also had a trade surplus there. We're heading into the weekend where we've got, talks with China kicking off. Let's talk about just overall your takeaways when we think about the blueprint of a deal with regard to the UK and US.
So I think and good morning, good to see you. I think
thank you.
Easy works, these are all the low-hanging fruit, right? And in the end, my thesis is that it's going to be us against China. We'll make trade deals with every country imaginable because it's in both countries' best interest. Nobody wins a trade war. You cannot tariff your way to prosperity. There are only losers. To me, this has always been about targeting China, isolating China, making deals with everybody else and forcing their hand. The problem is that the Chinese can outwait us. They can wait 4 years. Xi has control over his country like we don't have here, and that's not a compliment. So I think in the end, the Chinese are not going to make a deal. They're going to sacrifice their own economy for Xi and the government to save face. And my biggest concern, frankly, is that China is in the same place Japan was in 1990, where they had multiple lost decades. There's an eerily high number of similarities. But look, every time the president talks about tariffs, we do get volatility in both directions in the market. Mm-hmm. We have weekend risk, and who knows what's going to happen on Monday morning.
Okay, so you make a great point about the waiting game, especially when it comes to China, because we've certainly heard about their 100-year plan. When there was some new data out today from China's General Administration of Customs showing that Chinese shipment of goods to the U.S. fell more than 20% in April. At the same time, they did redirect a lot of those goods to other parts of the world, and there was overall some resilience when you see that the headline figure was stronger, but again, you had the weakness in U.S. exports, which makes sense, obviously, when you think about the draconian exports. Do you think China really can play the weight game?
I think they can really play the weight game because she is essentially president for life. Absence of revolution, which I don't think is going to happen. Mm-hmm. They're not going to be elections. Look what happened post-COVID or during COVID with the lockdowns. Yeah. They have a very tight grip on that country. Their biggest problem is not a tariff war with the United States. Their biggest problem is they have, like Japan did in 1990, they have an absolute and utter real estate catastrophe on their hands, the likes of which only one country's ever seen. So and that spreads into a banking crisis and everything else. They've got such big problems. If Trump can make deals with all the European countries separately as blocks, and the Asian countries ex-China, and we're in good footing with Canada and Mexico, these are going to be enormous wins. Couple that with deregulation coming the second half of the year, and supposedly this one great or beautiful, whatever you want to call it, bill. It'll be a big win for our economy. We will survive without huge imports from China. They will not survive without us.
Okay, so they won't survive without us. You have Scott Bessent, the Treasury Secretary, headed to Switzerland along with the U.S. trade rep to kick off some talks there. What's your view on that? And also, I'm curious to know, do you think the market is pricing all of this right?
So I'm very happy that Scott Bessent's a super smart guy. He and Mnuchin and Trump 1.0 were two of the smartest guys that we ever had in those positions. So I'm comfortable about that. I don't always agree with him, but he is super bright. And I like the fact that Bessent's now the face of the economic administration, and then Navarro hasn't been seen in, I can't remember, in a month. And people should not take that lightly. That's super important. If Navarro comes back into the media and is a prominent player, we've got bigger problems tariff-wise. So I'm encouraged that Bessent's traveling to Switzerland. I don't expect a ton out of it. Second question, I've said this all year. One day we're going to wake up, there'll be bad tariff news, and the markets rally. That's going to finally tell you the markets have fully priced in whatever tariffs are coming down the pike, and the markets have moved on to something else. I hope the something else is not growth that is significantly below zero for more than this anomalistic quarter we just had. That's what I hope. I hope it's something different and more positive. But we have not fully priced in all the tariffs yet.
We have not fully priced in all the tariffs. So we're sitting around 56.68 on the S&P 500. Where do you think the pricing goes from here through the balance of the year then?
So we came into the year, my thesis was we were going to be down 10% plus by July 4th, lasting 7 to 9 weeks, and that's the decline to buy. I thought we'd end the year up mid-single digits. I didn't think we'd go down 20%, frankly. I thought it'd be contained in the low to mid-teens, but we did nonetheless. I think now, look, markets have gone super far, super fast. The bottom's been the shape of a V. V bottoms normally are associated with massive Fed pivots. Get like 2001, 9/11, and 2018, and obviously COVID. The Fed didn't pivot yet. The Fed is woefully wrong and woefully late again. They should have cut rates in March. They should have cut rates the other day. They better cut rates in June. I do think, nonetheless, the Fed is going to pivot because growth is slowing. Walmart told us that in mid-February. And in the end, I think the stock market's at new highs by Q1 of next year. Maybe it happens in Q4, but I think the stock market is going back to new highs. There will be a pretty good pullback coming, and I think that's the one people should buy. Full leadership has not yet emerged. I really want to see the semi step up, but right now they're kind of being dragged along by everything else.
Okay, you want to see the semi step up, so you're starting to warm up a bit to them. I know you have a few picks you like, Freight Car, Otis Worldwide, CF Industries. Why do you like these?
So when I give picks, I try to find things that are off the beaten path, that aren't super correlated to the S&P 500, and they're not in the super sexy stock. So the three are old and boring. That's the theme. Old and boring, and they're okay in slower growth. Otis has been decimated because of China and the tariffs. China is going to be a huge market for Otis. Somewhat depressed earnings. It's a free cash flow machine. They're generating a ton of cash at roughly 4%. Huge buyback. I think the stock's going to new highs above 108. Rail is another one. Look, they make boring old rail cars in Mexico. Down on tariff fears. I think the tariff war is going to bring demand back for rail cars. The stock is super cheap based on sales. The competitors all make the rail cars in Mexico too. So this onshoring, reshoring is going to really help them. Management owns 30+% of the stock. The earnings report the other day was fantastic. I mean, I would not be shocked if this thing goes to 20 and 30 over the next couple of years. And CF Industries. So this is a kind of agriculture fertilizer company. Mosaic, most people would know Mosaic, which is one of the most poorly run companies in our view. This one's super cheap, trades at less than 10 times free cash flow. It's got a little bit of yield, 2.5% to boot. Earnings have been super good. Another stock hurt by tariffs, but if Mosaic can rally like it has, this one had good earnings. I think this one's $100 plus.
Okay, all right. Those are your targets. Thank you, Paul. That's Paul Schatz, president of Heritage. Good to be with you. Have a great weekend. He's the president of Heritage Capital. Great insight and perspective on markets and where they go from here, plus a few picks for you.